We're seeing a huge uptick in institutional trading. Names that would have never, you had never before associated with this are now showing up on our doorstep and saying, hey, we'd like to talk to you about this. It went from being a career killer to it's a career killer if you at least don't have a plan. As capital moves from weaker hands to stronger hands, those stronger hands aren't going to sell unless they're absolutely forced to sell. So you're going to see, a constrained supply and therefore should theoretically see price appreciation.
We're almost halfway through the year and the crypto markets are going through 2025 with a few watershed market adoption milestones. Galaxy completing its 4-year NASDAQ listing journey. Coinbase becoming the first crypto-native S&P 500 constituent. Trading platform eToro surging 27% rather, in its NASDAQ debut. We're going to discuss and focus on Galaxy's strategic evolution and what's next after the listing with our next guest, Jason Urban, who currently serves as the global head of trading at Galaxy. Welcome to the show, Jason. Good to see you. We've spoken before, but I think first time on my new show, but welcome back.
Thanks for having me. This is great to be here.
Jason, exciting times for everybody in the crypto space, exciting times for Galaxy. So congrats on your listing earlier last week. Jason, let's talk about crypto markets first and foremost. Before you were involved at Galaxy, you were an ex-Goldman trader, I believe. Walk us through some of the similarities and differences trading cryptos versus traditional financial products.
It's actually really interesting. So when you think about traditional financial products, there's often tried and true methodologies to examining fundamentals, to looking at things, whether that's, EPS or whatever the nature is of the asset that you're trading. I think in crypto, there are a different set of indicators that you look at: adoption, throughput, so on and so forth. And so as you start to think through how you examine that, I think you just have to train your mind differently. There are certainly things that are important in the crypto landscape that don't necessarily make a lot of sense in TradFi and vice versa. I think as you start to dig down, you have to separate what I'll call that emotional or tribal nature of some of the crypto ecosystems. You're starting to see more of that bleed into TradFi, whether you have GameStop or some of that tribalism, which I think is really embedded strongly in the crypto ecosystem. There's the XRP army, and there's, as you go through, there are a number of groups and people who identify very specifically with the coins. I think you're starting to see that a little bit in TradFi. That's something that's one of the differences, but over time, it's really a lot of the same people that are trading these things. And so you see a cross-pollination that I think is valuable. So it's certainly important to keep all things in mind.
Okay, Jason, I want to come back to your trading history in just a minute because I think it's very interesting for the traders watching how you transition from Goldman to the crypto side. Let's take a look at my screen first. This is Bitcoin versus the NASDAQ. And I'm just curious whether or not there's different macro forces at play for Bitcoin, and we'll talk about the altcoin market in just a bit. But given the strong correlation between Bitcoin and the NASDAQ and stock markets overall, I wonder, for you as a trader, do you just kind of examine trading cryptos the same way you would examine trading stocks, meaning you would look at the same drivers of liquidity, same drivers of sentiment, same drivers of direction, momentum?
I think that cryptos, people since the beginning of Bitcoin, people have always tried to put crypto broadly into a box, and I don't know that that's necessarily the right way to think about it. There are times where Bitcoin will behave like digital gold. There are times where it behaves as a currency. There are times where it behaves as a risk-on or risk-off asset, where you're showing the NASDAQ chart here with the Bitcoin overlay, where it's like, okay, I can see if risk is on, risk is going to be on in crypto. I think you're starting to see a little bit of decoupling of that. It's just now beginning where people are looking at it maybe through a macro sense, where it's like, all right, is this digital gold? Should it behave more like gold and less like a stock? I think that as you go down the chain or the tail of assets within crypto, some of those start to take on equity-like composition and less like a commodity or a currency or some other thing. And so I think you have to look at this through the lens of what is it that I'm comparing. If it's Bitcoin, where it's more digital gold, it's more entrenched, it's more accepted by TradFi in the mainstream, is a little different than some altcoin that's solving a very specific problem in a very specific